Hi fellow investors, my name is Chris and today I want to talk about Docusign. As we are heading into the post-pandemic economy, many of the high-growth stocks failed to measure up to expectation shortly after releasing earnings. Peloton, Zillow, and Robinhood are some of the names that dropped significantly. Just like this stock, Docusign business was thriving during the pandemic and they are scheduled to report earnings on December 3rd. In this video, we're going to discuss what Docusign does and is it a good long-term investment considering the risks and opportunities. As usual, this is just my personal opinion, not a financial advice. Always do your own research before making any investment decision. Docusign is the largest e-signature solution provider worldwide. As of July 2021, they have more than 1 million customer base across different industry and geographical locations. They have captured most of the market opportunities in North America, with 90% of Fortune 500 companies are either using Docusign or have used it at some point. Docusign is a software as a service, which means they offer a subscription for using their service. They started with a signature solution allowing businesses to send and sign electronically from anywhere, which speeds up the contract or agreement process. They acquired a lot of new customers during the pandemic as many companies accelerated their digital transformation. Before COVID-19, Docusign was already growing at a high 30% range, but for financial year 2021, it has seen a much higher growth rate over 50%. The share price reflects this as well. Taking into account the pandemic performance, it has risen 265% compared to the 76% of S&P 500. In late September this year, Docusign CEO Daniel Spring mentioned eventually the growth rate would be similar to pre-pandemic level, but it's not clear when it would happen, as he has been surprised by the persistence of business growing through the pandemic. Back to the main question, is it still a buy for long-term investors? In the short term, the market expects perfect execution from Docusign considering the high valuation. Per Yahoo Finance, it currently has 28.5 price to sales ratio and 121.95 forward PE. It will be interesting to see the forward guidance as they release earnings for the third quarter. If the growth rate drops more than expected, we would see share price pressure at least in the short term. For long-term investor, the good news is that Docusign service is very sticky. Many companies have experienced the cost saving and convenience and would likely to keep their subscription. At first glance, many would see Docusign as a company that just does a signature. While it's true that they have started with that service, since then they have expanded their product offering to a bigger solution called Agreement Cloud. They have done a few acquisitions to build more comprehensive solution leveraging artificial intelligence for more automation and smart analysis of contract or agreements. Since IPO in 2018, their revenue has grown from yearly revenue of 500 million to 1.5 billion in the financial year 2021. In addition, they have only captured a small fraction of the 50 billion total addressable market. Their Agreement Cloud has 4 main groups of functionalities. Out of the 4, Sign has half of the 50 billion total addressable market. So let's look briefly at the 4 groups. So the first group is Prepare. Docusign automatically prepare customizable agreement instantly through a few clicks and negotiate agreements through the support of artificial intelligence. For example, there may be email exchanges between the 2 parties involved in a legal agreement. Prepare feature would auto-analyze what has changed or added into the agreement, as well as providing cross-reference to the company on pre-approved terms. The second group is Sign. Apart from just a signature, Docusign also offers Notary, which is applicable if the documentation requires more than just an electronic signature, such as the presence of legal witness. The service has multi-state compliance and can be done online through video conference. The third group is Act. Docusign provides contract lifecycle management that automates manual tasks, simplifies workflows, and eliminates bottlenecks in a secure and centralized repository. This minimizes manual and disconnected processes that leads to wasted time, needless costs, and other potential risks. It also provides risk scoring of contract content to guide for faster actions. The last group is Manage. Through Insight, Docusign enables business to understand what it is in their agreement or contract. through a combination of artificial intelligence technology and contract analytics. While it's true that Docusign has captured most of the opportunities in the US, it has steadily increased their revenue from the international market as the next growth rate driver. The international business is growing at a much faster rate of 71% compared to last year. In total, it has grown from just 17% of total revenue 3 years ago to up to 20% of revenue as of the second quarter this year. The other thing that I like is they have 124% net dollar retention, which means their existing customers are spending more either through additional licenses or service across the different product suites they offer. This again shows once a company becomes a customer of Docusign, they are very likely to stick around and add more service. Docusign gains more revenue from larger enterprise or commercial customers. The total number of customers in this category has grown at 45% annual compounding growth rate since 2013. All in all, I have no doubt in my mind that Docusign is a great business for long-term investors. One thing to keep in mind, the high valuation and how fast the share has appreciated means that there would be great expectation baked in as the company releases earnings on December 3rd. I would watch any sign of revenue growth deceleration and the growth rate of large customer and revenue contribution from the international market. We may see correction if the drop is slightly more than expected, but given the potential for the next few years, I would gladly add more to existing positions on a pullback. Anyway, this is not financial advice. If you find this video helpful, feel free to like and subscribe, and see you in the next video.